does not necessarily represent the views or opinions of the staff, management, or ownership of this station. It's time to get on the right path with Right Path Real Estate Radio with Jason Bible. Get the answer to your question that's keeping you from taking action and succeeding today.
I just realized I spelled retirement wrong. So if somebody could fix that on Facebook for me, it'd be great.
That's funny.
I think Andy can do it.
Ready. The guy that will put your fears behind you is on the air now. Taking calls at 713-785-1817. Toll free 877-881-0271. Now here's your host, Jason Bible.
Hot mics.
Welcome to the show. Welcome to the show. I just realized as I typed it in, I spelled the title of today's show wrong. So if anybody in our group can go in there and change it for me during the show, that'd be great. What we're going to talk about today is the Great Retirement Con. I've talked about this before. I'm going to talk about it again today. Tonight, I'm actually hosting an event called the Landlord Workshop. It's an invite-only event, and I'm speaking tonight. It's a joint event we do with Renters Warehouse and Jet Lending. Great little event. We'll have about 100 people there, so it's a pretty small event. And I, the last couple of months, I've gone back and I started rereading all of the basic financial books out there. Now, at this point in my career, I love to say, yeah, I know this stuff already. However, this is kind of like a professional athlete going back and saying, let's go back to the basics. If there's one thing that I can tell you in any industry, any pursuit, if you're good at the basics or what people call the fundamentals, if you're really good at the fundamentals, the rest of the stuff is marginal that makes you better. I mean, let's just be honest with you. I mean, if what I know about rehabbing a house, if I go out there and get a level of experience equivalent to, let's say, one of the project managers at Fast Track, does that really make me that much better as an investor? Probably not. Or let's say I sit down with Ashley Patton over at the Patton Law Firm, and we have a discussion about different title issues, and I become an expert on title work. Does that make me that much better as a real estate investor? It really doesn't. However, if I can become better at sales and marketing, at identifying opportunities, executing offers, and buying houses, which is the fundamentals of being a real estate investor, I guarantee you that'll pay dividends. Absolutely pay dividends. You look at basketball. You get better at dribbling that basketball, the better you are on the court. Faster you can run, typically the better football player you'll be. Stronger you get, the more weights you lift, all that stuff, all of those fundamental activities you get better at, the better you become as an athlete. And it's the same in business. So I've gone through and I'm rereading all of those basic financial books. And I'll tell you, it's just the ones that I like. I've read a zillion of these things over the years. A lot of them are horrible. I'll just tell you that right now. Not the advice, but how they're written is pretty bad. How I came down this track. My wife and I, we had just gotten married. This was 2002. And somewhere around 2003, 2004, we went on a cruise. And Sarah's objective for the cruise was to work on her tan and just hang out. My objective for the cruise was to read a bunch of finance books. Well, nobody does that when they go on vacation. Nobody reads finance books on their vacation. My goal during that time was I was completely disconnected from work. So I couldn't do any work, but I was paying, at least at the time, what we thought was an inordinate amount of money on taxes. When Sarah and I first got married and we got our first jobs, I was making $25,000 a year and she was making $30,000. So our household income wasn't even $60,000 a year. It's $55,000 a year. And I thought we were getting obliterated on taxes. What do you mean I don't get a tax return? Like what? I thought you always got a tax return. No, that's not true. Do your taxes, you don't always get money back. And so I also knew that, hey, we got to start saving retirement. We got to figure this out. My background's in environmental science and chemistry. It wasn't in finance at the time. So I took all these books, half of our suitcase. This was before Kindles and iPads and all that other stuff. This is 03, 04, somewhere around there. And I stuffed our suitcase full of books. As much I could stuff in there. You know, one of the things that always, this is a side note here, one of the things that's always shocked me is on cruises and beach vacations, how much stuff people pack. I mean, what do you need? Like one pair of pants, one nice shirt, maybe one pair of nice shoes, and the rest is like bathing suits and flip-flops. I mean, how much space does that take? That was one of the things that shocked me when we were boarding the boat for our first cruise. Like, what are you guys bringing? I mean, there's one nice dinner, so bring a jacket and a nice shirt, and the rest of it is like shorts and swimwear. Like, what do you need 70 pounds worth of junk for? Anyways, so we go on this cruise, and I start reading all these financial books, and I was introduced to all the finance gurus out there. And one of my favorite books, because it's just incredibly simple, is Dave Ramsey's book, The Complete Money or Total Money Makeover. I think that's what it is. It's his like foundational book. It's the book everybody reads, right? And he's got a couple of things in there that you got to follow, and it's relatively good advice. I'm still not so convinced on the pay your house off early and all that, but I get it. From a math standpoint, it doesn't make sense. From a psychology standpoint, it does. So anyways, I'm going through and I'm rereading all these financial books right now. One of the fun things I'm doing is I'm going on eBay and I'm looking for the first editions for some of these things. I was actually looking for Robert Kiyosaki's book. I did not know that Rich Dad, Poor Dad was actually self-published. I thought he had, a book deal and all that. It's actually a self-published book, so trying to find the first edition of that's going to be about impossible. However, I'm going back and I'm rereading all these things just to get better at the fundamentals, to review the fundamentals. And why are we doing that? You guys know that we have Right Path Real Estate, we teach real estate education. We also have another company that teaches financial education in the form of really cool tools that we use to manage our personal lives and business. And that was something we started a few months ago. So I'm going through and I'm rereading all of these books. And I thought, you know what, for the radio show today, maybe we need to back way up here. And we need to talk about the boondoggle that is retirement. I don't think most people understand how expensive retirement is. There's a Facebook video out there or a YouTube video of me where I talk about if you want to be poor, just go ahead and retire. Retirement in America is poverty for the vast majority of Americans. In fact, if I remember correctly, we've got a blog post about it where I go into why that is. I'll tell you one of the reasons is healthcare. Your health and the cost of your healthcare. I don't care if you're the fittest guy in the room or you're incredibly obese. Where you're going to spend your healthcare dollars is in retirement. Now, some of you will be more expensive than others. For example, the really fit guy versus someone who's obese smoker who's had cancer 17 times. I mean, there is a difference in quality in life and expense there. However, at the end of the day, you will spend the vast majority of your healthcare dollars the last 6 months of your life. And then you're going to spend a whole ton of dollars before that prolonging your life. That's just reality. And a lot of people think, oh, well, that'll be a Medicare, Medicaid, some government program I can't pronounce. It'll be their problem. No, trust me, it'll be your problem. And as our society ages, it's just going to become more expensive. Nearly 83% of retired households have less than the Medicare costs alone will consume. Nearly 83% of retired households have less than what is required for Medicare costs alone. Right now, they're assuming Medicare costs for the average retiree retiring today will be somewhere between $240,000 and $430,000. I'm going to say that again. If you're retiring today, it's going to cost you in healthcare costs alone. This is Medicare out-of-pocket expenses between $240,000 and $430,000.
2 minutes.
This is a conservative radio show, pretty conservative host. Let's just round that to a number that makes sense. Let's call it $500,000. If you're retiring today, you will spend $500,000 on healthcare. That's Medicare out-of-pocket expenses. That doesn't include what Medicare covers. That's just Medicare out-of-pocket expenses. And nearly 83% of retired households don't even have that much money saved up. 1/3 of retired households are entirely dependent on Social Security. And 34% of older Americans depend on credit cards to pay for their basic living expenses. The vast majority of Americans, the vast majority, will retire in poverty.
1 minute.
That's the vast majority. I'm not talking about greater than 50%. I'm talking about greater than 80, if not 90%. And it's not because they didn't have good jobs before and they didn't have college educations before they retired. It's the fact that they had no retirement plan. We get back from the break. I'm going to talk about how to build a retirement plan with real estate. It's Jason Bible, Right Path Real Estate.
Mic's off.
Are small returns getting in the way of your retirement plan?
Thanks, Andy.
Don't settle for mediocre results. There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are you expecting to close accurately, on time, and with lots of communication on your home purchase? You've come to the right place. I'm Jennifer Hernandez, Senior Loan Officer with Legacy Mutual Mortgage. Our goal is to give our borrowers and referral partners an amazing experience during the loan process. My team believes in putting people and culture before results. Our company concentrates on building those teams who operate with structure, process, and recognition for going the extra mile for you. This way, we have the energy to make this your best home purchase ever. Give us a call today to find out the simple steps to get started. I'm Jennifer Hernandez, the Hernandez team at Legacy Mutual Mortgage. Jennifer.legacymutual.com or call 713-579-3611. Again, Jennifer.legacymutual.com. We can't wait to consult with you soon. NMLS 514497.
Equal Housing Opportunity Lender. NMLS 514497.
Did you know that there are over $24 trillion in retirement accounts in the U.S.? Imagine if you could use someone's IRA to fund all of your deals. Well, you can. Quest IRA is based locally here in Houston, Texas. At Quest IRA, we offer retirement accounts that can be used to invest in real estate.
And we're back.
Private entities, and much more. Many of our clients loan money from their IRAs to fund real estate deals all over the country. We don't sell any investments or give advice. However, we do hold free networking events, weekly educational classes, and free consultations with an IRA specialist. For more information, visit our website at questira.com or call us at fund IRAs. To tap into the $24 trillion in retirement accounts in the U.S., call Quest IRA at 1-855-FUN-IRAs or go to our website, questira.com.
Are you looking for an investor-friendly general contractor for your
1
investment
minute.
property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties. Whether it's a flip rehab or a rental rehab, we manage every aspect of a rehab from start to finish with a highly efficient, standardized process.
Over the last 6 years, Fast Track has completed over 700 projects, which has helped us to create our 3 keys to success. Use a detailed scope of work so that everything gets done, train and maintain quality crews so it gets done right, and complete the work in a proper order so it
Morning,
gets done
Lindsay.
fast.
No more managing it yourself, no more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992. Again, that's 832-742-9992, or reach us on the web at fasttrackremodeling.com.
This is Business 1110.
All right, Jay, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Just went out, freshened up my coffee. Ran into Heather here in our office. Who is loving allergy season here in Houston? It is awful. That yellow stuff is everywhere. Sarah and I went on a bike ride this morning, or not this morning, yesterday. And we ride with St. Arnold's, who is a brewery here in Houston. And we did a big team ride. I guess there were, I don't know, probably 100, maybe 150 people that were there. And so thankful it rained the day before, because otherwise you get caked in that yellow live oak stuff. It's just awful. So in any case, Heather and I are suffering this morning from all the allergies here in Texas. But in any case, it's a great time to be here. It's just the weather's great and all that, but it's just, whoo, allergies are just going crazy. All right, let's talk about retirement some more. I gave you a couple of stats before the break. And the reality is that the vast majority of Americans, if they want to be broke, go ahead and retire. Nearly 83% of retired households have less saved than Medicare costs alone will consume. The estimate is $240,000 to $430,000. Now, here's a caveat, folks. We know for a fact that healthcare costs are increasing on average by 7% per year. In fact, if you really get down to it, inflation, I have to pull this up. It was actually in one of Dave's books. He did an interesting calculation on inflation. If you're not getting a 6 to 7% return in some cases, you are just breaking even with inflation. You look at the stock market right now and you look at what does it take to get 7, 8, 9, 10, 12, 15% rate of return. It's not easy, and it's a lot of risk. That's one of the reasons why we're big fans of real estate. I'm a fan of real estate. I mean, even bigger fan of paid off real estate. Oh, but Jason, your returns go down. Yeah, in an absolute basis, you are absolutely right. Instead of getting an infinite rate of return, maybe I only get 15%. But you know what? I also don't get the whipsaw from debt when the market crashes. You know, it's fascinating. I just finished Aaron Clarey's book last night, Behind the Housing Crash. The best book I've ever read on the housing crash, on the housing crisis. What happened? And when you read through that, and I'll tell you what makes Aaron's book so much better than everybody else's is he was at the community bank as a risk manager, as an analyst, as a credit analyst on the commercial side. So he was seeing these development deals. he was seeing what was going on in his own bank, and he just writes for hundreds of pages about what their bank was doing, just their bank. And he said, I'm telling you, this was duplicated over thousands and thousands and thousands of times with other banks across the country. And when you look at what caused the housing collapse, you read through his book and go, I don't know if we're going to see a housing crisis, a housing crash like we did in 08 and 09. Is it possible? I don't know. But so many things had to happen in order for that market to implode. When I hear people talk about, the price of single family keeps going up, there's going to be a crash. I'm like, prices have nothing to do with crashes. Supply and demand do. And he talks a lot about that in the book. Highly recommend you guys get that book. See, somebody posted on our Facebook page, probably Andy, with a link to the blog article, which is Retirement is Poverty. Most people are not ready for retirement. Here's what happens. Even if I was chatting with a buddy of mine this weekend. We had a big party Friday night. A friend of ours I don't want to say he's retiring, but he's got a real interesting career. He spends part of his time in the academic arena and then his other part in industry. And he had a huge impact on my life and a lot of the other folks that worked for him. So we put together an endowment fund for him. Big surprise. Took about a year and a half to get everything set up and then, write some checks and all that stuff. And so we presented that endowment fund to him Friday night. It was a whole lot of fun. And after the party, me and another buddy of mine, we get to see each other about once or twice a year, went out to dinner, pretty late night dinner. Of course, went out to the Flying Saucer. So we're sitting there at the Flying Saucer chatting, and we were talking about retirement. He's a little bit older than I am, about 7-8 years older than I am. And he's always been one of these folks that I've looked up to. And we started talking about what it takes to retire. And he said, it doesn't really matter. He said, if you have $1.5 million, $2.5 million, $3 million, he's like, that, I don't even think that's really enough. Now, mind you, this is he and I chatting, and he's not quite 50 yet, and I just turned 40. And we already recognize by the time we retire, $2-3 million ain't going to be enough. It's just not. And when you start looking at the investments that we have made, and especially what he's done, most Americans, if they're just saving with their job, they're not going to be able to retire, period. It's just not going to happen. Guys, you cannot retire based off what you're saving alone. You could do that a generation ago. Like my parents and grandparents could do that. But our generation, tough luck. There's no way. There's no way. The markets are too volatile. The yields are too low. You can't do the same things that your parents did to retire. It doesn't happen. It's nearly impossible. In part because everything's a defined contribution plan, meaning there's really no pension plans anymore. And truth be told, those folks that are on corporate pensions, or I should say in corporate pensions, or in other pensions that are anything other than federal pensions, they might be in for a rude awakening. The vast majority of those pension funds are broke. Absolutely broke. I mean, Google that up. Pension funds and, insolvency and all that stuff. I mean, there's a case sitting in front of the Supreme Court right now that has to do with a municipality that has gone back to the pension fund and said, the pensioners, and basically said, sorry guys, we're cutting your benefits in half because we ain't got the money. And they did it. And they've gone through the appellate court system, and the appeals court said, no, the city can totally do that. And I think it's going to end up at the Supreme Court. And if that ends up being law of the land, I don't care where your pension came from. As long as it's not a federally backed pension, you are going to get hammered. So if you can't count on a pension plan and you're not going to be able to save enough money for retirement, what are your options? One is you can go into the capital markets. You can go into mutual funds, stocks, bonds, all that nonsense and invest in that. And can you do well at that? Yeah. But you can also lose it all real quick. That event that happened a couple of weeks ago, about 6-8 weeks ago now, where the volatility index spiked from a statistic standpoint, that was what they call a 28 sigma event. 28 sigma, meaning the likelihood of an event happening like that is like 1 in 10 million years. I mean, it's ridiculous. It's so outside the norm that I don't even know if I can sit down and calculate it. A 28 sigma event is like 0.000000001% happening. I mean, it's that unlikely to happen. The housing crash, which is what they call a black swan event, was like a 6 sigma event. I mean, it's so incredibly rare. However, a lot of really high-powered finance guys have been predicting since the Fed started changing interest rates in 2001 that we would begin to see these incredibly infrequent events more often. Now, that sounds weird, but it turns out it's becoming true. So how do you invest in assets that are that volatile? When you look at the stock market as a whole and you look at the risk you've got to take to get a decent return,
2 minutes.
That's what I'm all about. I'm all about risk. People could brag about returns all day. I always ask, what's the risk? Oh, I got a 40% rate of return on this note. Well, what did you do? Oh, I bought this piece of junk house, in the worst side of town. And I'm like, why would you do that? There's so much risk there. I'm all about the risk. If you can explain to me the risk and I can calculate the risk, then I'll look at your return. But so many people, when I tell them, oh, I'm supposed to go and invest in this mutual fund. Okay, great. What are the companies in that mutual fund? Where are the values? Where's the value from that one company? Where is it derived from? Is it derived from the free cash that that company creates? Or is the value in that company simply from less shares being on the market because that company's bought all their shares back the last couple of years?
1 minute.
Where is the real value? And in real estate, in single-family real estate, the value really comes from two places. One is a limited amount of supply, and the other one is a lot of demand from two places: retail buyers and other investors. We get back from the break. I want to talk about how you calculate returns. There's 4 ways to calculate a return in single-family real estate. I'm going to talk about that when we get back from the breaks. Jason Bible, Right Path Real Estate.
Mic's off.
Do you have cracks in your brick, doors that stick, or sheetrock that's coming apart? Then you may have foundation movement. Due to our expansive soils in the Houston area, it's probably not a question of if you have movement, but when. Call Foundation Check for a truly independent, unbiased foundation evaluation. Foundation Check has been in business since 2009 and has completed over 1,400 evaluations. We're not in the business of repairing foundations or selling you unnecessary repair work, but we are in the business of evaluating your foundation. Our product is designed for house flippers, landlords, or even owner-occupied properties. Each of our files is reviewed by a licensed engineer. Remember to check before ever repair. Call 346-702-3825. That's 346-702-3825. Or you can reach us online at foundationcheck.com. That's foundationcheck.com.
Hi, Clint Coons here, attorney and avid real estate investor. You know, the greatest mistake real estate investors make is not understanding the potential liability that exists from owning real estate. At Anderson Business, Legal, and Tax Advisors, we specialize in protecting real estate investors in all 50 states. In addition to structuring your business for optimum protection, we provide guidance so you pay the least amount of taxes available under the law. We have 150 employees that range from lawyers to CPAs to estate planners and much more. Download our free ebook, The Invisible Investor Strategy, today at AndersonAdvisors.com or call for a free risk reduction analysis and financial blueprint at 800-706-4741. Anderson Business Advisors will help you keep more of what you earn. Call us today at 800-706-4741 and mention Right Path Real Estate.
Time is money in a real estate deal. If your insurance company is slow or non-responsive, you could lose a deal like that. You need a quick turnaround on quotes or binders? The agency for that is Benchmark Insurance for Protection.
Nikki, you said people were hugging you at the end of the event?
They know
Yeah,
what
I got
you need and when you
hugs.
need it. They're here for you.
That's
If you're a
great.
rehabber, wholesaler,
Oh, that's
home
great.
developer, bundling your properties on a single policy will help save time and money. Benchmark has been in business for over 10 years, and we insure over 30,000 properties. Contact Benchmark about our exclusive investor package. Call us and let us show you what we can do for you at 281-569-4353. That's 281-569-4353. Or online at benchmarkbroker.com. That's benchmarkbroker.com. That's 281-569-4353. Or online at benchmarkbroker.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets
All
up
right,
a
we're
repair
coming back.
escrow
Well, we got
fund
40
to
seconds.
help you
Okay.
with repair costs. Jet Lending has originated over 2,000 loans in Texas, valued at over $250 million. Jet Lending will help you evaluate your deals for free and give you feedback on value, cost of repairs, and potential loan amount. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com. Oh, and don't forget about our famous Third Wednesday Super Investor Networking Meeting. Lots of fun, lots of great real estate talk. We'll see you there.
This is Business 1110.
Hot mics.
Welcome back. Jason Bible, Right Path Real Estate. I hope I've made the case for retirement, at least through the traditional means. It just doesn't work. I'll give you my basic advice, then I want to talk about real estate. Like I said, beginning of the show, I'm rereading all these finance books. I'm going to start another one tonight. Well, probably not tonight. I'm going to get home pretty late tonight. I don't know. If I can't sleep, probably read one. I got a stack of these things sitting next to my nightstand. I've been thinking, speaking of my nightstand, I've been thinking about putting on maybe a blog post or something, but how to, like Jason's guide to kind of life stuff, how to just live, right? Making good financial decisions. And Sarah and I were talking last night. We're big fans of buying some of this mid-century modern furniture, but we only buy, people will joke, we call it antiques. They're not really antiques because they're only 50 years old. But it's so funny. You look at the cost of new furniture versus, good solid wood used stuff, and it's so much better. I'm actually getting a desk refinished this week that's just going to look gorgeous. But anyway, so get back to the point here. If you're like, Jason, I'm not even ready for retirement. You're like, I don't even know what retirement looks like. I don't know how to budget. And let me tell you this. If you're embarrassed by it, that's okay. There's no reason to be embarrassed. You would be amazed how many people who are smart people, got college degrees, make good money, that just don't know how to budget and kind of run their household. There's no reason to be embarrassed by that. Let me tell you guys, the stuff we talk about on this radio show, they don't teach in school. They should, but they don't. So don't be embarrassed if you don't know this stuff. we have an event tomorrow night where we talk about how we run our financial lives, the tools that we use to run our households and businesses. It's our Right Path Financial Education company. If you are interested in attending that event, show up Tuesday. You can get here about 6:30. We'll get started about 7. And we'll be happy to host you. It's how we budget, how we talk about budgeting and insurance and all that other stuff. Or you can go to Right Path, or best way to contact us, support at rightpathrealestate.com. We can send you the information there. Let's talk about real estate for a minute. We know that these traditional retirement vehicles either are too volatile, at least in my book, too volatile. In other words, they have too much risk, or they just plain don't work. There are a ton of financial products out there that just plain don't work. They make a lot of money for other people, but not you. So what do? We buy single-family real estate. That's what we do. Buy single-family houses. We buy them to rent. We buy them to flip. We buy them to wholesale. We may lend some money on them. There's 4 ways to make money in real estate. You're flipping houses, meaning you're buying a house, you're fixing it up, you're putting it back on the market to sell retail. That's how you build income in real estate. Second way you build income is through wholesaling. You buy a house, or you get a contract on a house, and you sell that contract to another investor. That's called wholesaling. That's also how you build income in real estate. Next question is, Jason, how do I build wealth in real estate? Real simple, only 2 ways to do it. Buying a house and leasing that house out to a tenant. It's being a landlord. Second way to build wealth in real estate is to be the banker. Lend your money to someone who's a real estate investor, or you can buy a house, sell the house to a retail buyer, but then they make payments to you for that purchase. That's called owner finance. We do all 4 of those things. We're the bank, we be a landlord, we wholesale deals, and we flip houses. It's the 4 ways to make money in real estate. And I will tell you right now, it doesn't matter if it's residential or commercial. The same 4 apply. That's how we do it. That's how every real estate investor does it. Now, there are different techniques inside those 4 ways to make money in real estate, but that's it. It's only 4. However, my favorite, and I'm doing more of it. You know, we flip, wholesale, or rent about 100 houses a year. Most of what we do are wholesaling and flipping. We'll buy a handful of rentals here and there. I'm buying more rentals. That's the part of the business I really love, are rental properties. And what I found is there's really 4 ways to calculate the return on a single-family rental property. There's obviously cash flow. Everybody loves to do cash flow calculations. Meaning, if I buy this house and I'm all in for $120,000, and I've got a loan for $120,000, my principal, interest, taxes, insurance, homeowners association dues, vacancy, make-ready costs are probably going to be around $1,200 a month. If that house rents for $1,500 a month, I make $300 a month in cash flow. Cash flow and profit I put right in my pocket. In fact, if you guys sign up for our weekend retreat, we give you our deal analyzer, how we calculate how we do this. It's a real simple. Calculator is relatively complex, but the numbers are pretty simple. You put in a couple of numbers and boom, spits out exactly how much money you're going to make. That's rental properties. $300 a month. So you're making $3,600 a year. So everybody does cash flow calculations. But these 3 other things they miss. One is appreciation. I've said on this radio show for the last few months, every month you're not buying a house, you're losing $1,000 a month. Where do I come up with that number? $300 a month in cash flow and about $700 a month in appreciation. Houses in certain submarkets in Houston are appreciating $700 a month. It's like $9,000 a year. Every month you're not buying a house, you're losing $1,000 a month. That's insane. When this is how I know people are either bad at math or they just don't understand investing. When Bitcoin went through all of its Bitcoin gyrations, and it's doing it again, and I got all these guys on Facebook that are real estate investors that are investing in Bitcoin, and they're talking about these outsized rates of return. I said, you don't really understand math, do you? Because real estate is still way better than Bitcoin. And then when you adjust real estate versus Bitcoin on risk, real estate is an even better investment. It's not even close. Bitcoin, for all intents and purposes, is a Ponzi scheme. Real estate is absolutely not. So you've got this piece of property. It's appreciating at $700 a month. It's making you $300 a month in cash flow. Then there's this third thing that people kind of talk about, but they don't put it in their calculator for some reason. But it needs to be in your calculation somewhere when you're evaluating a deal. And that is depreciation. How much am I able to save by buying real estate? And what do I mean by that? The building, you're allowed to depreciate. Depreciation is technically a loan from the government when you really look at it. It was one of my favorite attorney buddies said that one time, and it's a perfect way to explain it. You're able to write off a certain amount of the physical asset against the income on that property. Depreciation. And then the fourth thing, another one a lot of people miss, is the mortgage paydown. I saw this in a Facebook post one time where somebody was comparing owner finance to rental properties. When you look at your mortgage every month, you bought a $200,000 house and you're paying 6% interest on it. How much are you going to pay in interest payments over the lifetime of that loan? $140,000, $150,000, $160,000 in interest. Well, when you're buying a rental property, are you paying that or is the tenant? The tenant's paying that. If you have a mortgage on a piece of property, I'm not paying that. The tenant is. So that also gets calculated in your rate of return.
1 minute.
The last thing, and this is outside the 4. This is the number 5. And I'll tell you why I don't include it in including my rate of return calculation. Because it's not necessary to do if you're buying buy and hold properties. And that is, if you're buying these properties at a discount, you get instant equity. You guys may hear the 70% minus repair rule. If you're using that in your rental property business, that's also included in your rate of return. When you put all these things together, it's really hard to beat real estate. We get back from the break, we're going to talk more about retirement and how real estate is one of the great ways to build your retirement wealth. It's Jason Bible, Right Path Real Estate.
Mike's off.
Are you a realtor or seller that is concerned about the new TRID rules and closing on time? I'm Jennifer Hernandez, Senior Loan Officer at Legacy Mutual Mortgage, and we have mastered the 30-day close. We close on time, accurately, and with tons of communication. You'll have a dedicated team of a coordinator and a contract to close associate. Give me a call today at 713-579-3611 and let's talk about how we can help you on your next transaction. NMLS 514497.
Are you looking for an investor-friendly general contractor for your investment property? Then call Fast Track Remodeling at 832-742-9992 or reach us on the web at fasttrackremodeling.com.
Fast Track Remodeling specializes in turnkey remodeling of single-family investment properties, whether it's a flip, rehab, or a rental rehab. No more managing it yourself. No more doing the work yourself. Fast Track Remodeling really does manage it all.
So give us a call today at 832-742-9992.
Selecting a foundation company and their product for repair is a lot like a game of chance. You simply don't know what you're going to get. The foundation repair industry as a whole doesn't carry a license, nor is it regulated. However, Foundation Check utilizes professional engineers to review all of our files to give you the best foundation analysis in today's market. Remember to check before every repair. Call 346-702-3825 or you can reach us online at foundationcheck.com.
Hello, real estate investors. Do you need a lender that moves fast at the speed of a jet to fund your investment properties? Jet Lending will help you purchase properties quickly with as little cash out of pocket as possible. Jet Lending also sets up a repair escrow fund to help you with repair costs. Jet Lending is your fast and friendly hard money source for first-time investors and seasoned professionals. Call 281-872-7800 or email us at info@jetlending.com.
Real estate investors, if you're not familiar with Quest IRA, let me tell you what you're missing. We've got free weekly educational classes, networking opportunities, and the ability to tap into trillions of dollars for your real estate investing deals. Come by our office or join us remotely as we simulcast all of our educational classes every Tuesday morning and evening. For more information, call us at 1-855-FUN-IRAs or visit our website at questira.com.
Taxes. Just the sound of that word makes people cringe. At Anderson Advisors, we provide tax reduction through asset protection for real estate investors throughout the country. Our unique philosophy has CPAs, lawyers, bookkeepers, and estate planners with one common goal, helping you, the real estate investor. Check us out today at andersonadvisors.com and don't forget to tell us you heard about us at Right Path Real Estate.
You found or inherited a great investment property. Problem is, you don't know how much it's worth, or more importantly, what to do to maximize your investment while mitigating risk. This is exactly why we started Next Gen Appraisals. Next Gen is a group of appraisers specializing in investment real estate. We understand that investors aren't just looking for a number of what their property is worth, but a comprehensive analysis of the market. Give Next Gen a call at 713-346-9911 or check us out online at nextgenappraisals.com.
Are small
30
returns
seconds.
getting in the way of your
Alrighty.
retirement plans? Why settle for mediocre results? There's a better place to invest. The experts agree. Single-family real estate is one of the best investments you can make. Find out how JB Fund Services offers a 9% preferred return and up to a 13% waterfall. Call us today at 281-915-0906 or visit our website, jbfundservices.com. That's 281-915-0906. This investment is offered to accredited investors.
This is Business 1110.
All right, Jay, hot mics.
Welcome back. Jason Bible, Right Path Real Estate. Look, folks, brutal reality is you've got to make a change to your retirement plans. It's the same conversation I had with that buddy of mine Friday night. This is an individual who's, for all intents and purposes, wildly successful. And even he recognized, he's like, man, I got to do, we're saving a lot of, compared to most Americans, he's saving a lot of money. He's got a great net worth, but he understands that it's not going to be enough for retirement. It's just not. $3 million ain't going to cut it. $1 million isn't going to cut it. It's just not. And here's the other problem. If all of your assets are in very liquid investments, meaning stocks, bonds, mutual funds, all that kind of stuff. Stuff in the capital markets. And it's not kicking off cash flow that you can live on. All you're doing is you're eating your nest egg. You spent 40, 50, 60 years working. And now you have to eat your nest egg to live. That's insane. It doesn't work. This isn't like when your grandparents retired and savings accounts and CDs were kicking off 8, 10%. Put $1 million into a CD that's kicking off 10%, you're making $100,000 a year. That's great. Guess what? That ain't ever coming back. You need to take that $1 million and put it into real estate that's kicking off 10%. That'll make you $100,000 a year. That's what you need to do. That's what we're doing.
2 minutes.
Because the reality is if you're eating your nest egg, there comes a point when you're praying that you die before you run out of money. That's the world that most retirees are living in. You get your $1,200 a month Social Security check, and you just pray you die before you run out of money. It's a horrible way to say it, but it's absolutely true. So here's what I recommend, folks. I highly recommend real estate. Cash flow is fantastic. You get some appreciation if you decide to sell one and buy some more. You get to write off to a certain extent the depreciation on that asset. You have somebody else paying down the mortgage. And that last thing is, if you buy it at a discount, you get equity day one. You cannot do that with any other investment. Highly recommend you guys consider real estate investing. We put on an event every Thursday, the Intro to Income and Wealth Workshop. Go to rightpathrealestate.com. You can sign up there. It's rightpathrealestate.com. I want to thank everybody who went on our bus tour this last weekend. It was full, great bus tour. Everybody had fun. Learned a whole lot about it. We are going to do that monthly. So if you want to sign up for our next bus tour, you can send an email to support@rightpathrealestate. We'll get you on the email for the next bus tour. I want to thank everybody for listening. Tom will be on the show tomorrow, Build Your Team Tuesday. Otherwise, I'll see you guys tonight at the Landlord Workshop. It's Jason Bible, Right Path Real Estate.
All right, Mr. Bible, have a good one.
Thank you, ma'am.
You've been listening to Right Path Real Estate Radio. Find Jason and Tom at rightpathrealestate.com.